All right. So today we're talking about what you need to budget when you're buying a home. And I want to thank Bobby for being here with me today.
Thank you, Ed.
Yeah. And, and a lot of people ask us, why do we keep bringing up the same stuff over and over again? And it's because we want to make sure that when you're buying a house, you don't forget certain things and you're not surprised by certain things. So we want to make sure we tell you multiple times, kind of the same thing over and over again. Repetitive. That way you understand when you get into contract, there's no surprises. You're happy all the way through. Because even though we do this, we still have clients who act surprised.
Yes, and sometimes there's a lot of information to take in all at once, and I try to tell everybody everything up front, and then I say, okay, now I'm going to go over each one of these steps individually as we go through it and explain it more in detail.
Right.
But obviously, when it comes to what you're about to talk about as far as budgeting and stuff like that, that you have to put the horse in front of the carriage. Before we start looking at houses, you have to have the money to actually buy one. So,
right. Carriage, man. How old are you?
I'm thinking with gas prices, man.
Oh, you're thinking Christmas already.
Well, I wouldn't mind that either.
All right. So the first thing that you budget for when you're going to buy a house, which is obvious, is down payment, right? And one of the biggest, and I'm going to throw on the screen, misconception is how much you have to save for a down payment. A lot of people think you need to save 20%. You don't need to. The good news is basically you can, put as little as, I have 3.5% on here, but you can do 3%, or you can even do zero down if you're in a rural area with USDA, or if you're a veteran, you can do VA. And a lot of times people in this market are not taking VA loans because they're worried that they're going to have to, pay for pests or pay for certain things. And that's not the case. VA only requires a short form pest report. So if there was active ones in the past, but they're not active now, then you don't have to deal with the issues that the vet can deal with that once they own the home. So there's no reason not to. A lot of people think veterans don't have any money. They do. They just don't have to put it down because it's not required to put down because they signed on the dotted line. Correct?
Yeah. And, it's kind of interesting because I actually got an offer this past weekend on a property, and someone had put down 5% on a VA loan. I was like, why would they do that?
Because you can actually, if you put down money on a VA loan and you have to pay the funding fee, right? So if you're a disabled vet, you don't pay the funding fee. But if you do, the funding fee goes from, bear with me here, I have 2.30 to like 1.95, 1.85, and 1.65, depending on how much you put down. I don't remember exactly the numbers. I'm sorry. It's just one of those things that it's much easier to put that. So because I had a gentleman who put down 10%, and I think it went down to 1.65.
Gotcha.
Yeah. So that's why people do it. You don't have to, but they wanted to save on the funding fee and they had the money. That's, and sometimes it saves, $100 a month, and that's what they want. They want that savings from that payment.
Yeah.
But you don't have to. All right. Part of what you're saving for is your earnest money deposit. The earnest money deposit, and everybody wants to know what that is, right? Basically what that is that's the good faith that you do to a contract. When you write a real estate contract, it's contract law. You have to have some type of earnest to make it a valid contract. And that's what you're doing. I'm not an attorney. I just know that, most people don't realize real estate contract is a contract. It's an actual contract. And it's funny because I've seen people in our industry make, white out stuff, cross it out after people signed, and you can't do that. You're changing a contract. So basically what you're doing is so if you're required to put down on, what is it, 1% on average, what people put down?
Typically, yeah. That's pretty standard.
Right. So if you're buying a house for $400,000, 1% earnest money is $4,000. That money is a credit that goes towards your down payment or other closing costs. It's not just given away. Goes towards your stuff. But in this market, even though sometimes people will write a check, right? And the check doesn't get cashed. People have to wire the money. Do you guys still require a check when you get the contract, when you send over the contract?
So right now, the way the contract is set up is that it says you're going to have a wire transfer actually. And if you want to do like a cashier's check, I don't recommend cashier's check or money order, right?
No, do the wire, but get it from escrow.
Well, yeah, I was going to say it kind of depends, right? Because like in this competitive market, sometimes we're writing where the EMD is going to be dropped off within 24 hours. And if title and escrow doesn't get you the wire instructions in time, you might actually miss that window.
Right. Well, then you could do you can't do a personal check. You'll have to do a money order or cashier's check or stuff like that. But be careful wiring in this market. Make
Yeah.
sure you get it from the actual escrow company through their secure, email that they send it to you, because there are people out there who have lost money through the wire. So be careful.
Yeah.
All right. So the other thing that you have to save money for when you're buying the house is closing costs. And we did a whole show on what closing costs are. So you can always go back to our YouTube channel and find it. But basically, closing costs is what you're covering various fees for various people and services when you're buying the house. That's the easiest way to put it. It depends on, in the United States where you live, what that number can be. That can be anywhere from 2% to 5% of the home purchase price, depending on where you're buying and what you're doing and who your lender is and who all this other stuff. Because what closing costs could be underwriting fees, processing fees, those garbage fees, and then credit report, appraisal, title, escrow. It could be your home warranty. It could be things like that adds up. And there's prepaids, which closing costs in what we're using right now is basically if you impound your loan, then that would be also on top of the closing costs or with the closing costs. So on average, what I see on a $400,000 house, you're probably looking at about $700 to $7,500 for closing costs and prepaid items right now. So,
and that's normally what people want to know. They say, okay, so that's all confusing. Now, how much do I need to save, right?
Right. So basically what we're saying is your down payment, depending on the program that you're doing, that's what you're going to save. Sorry, can you hear that? Everybody wants to get a hold of me during our lives. It's been, a lot of people are like, it's been slow. It's like, it hasn't been slow. I think a lot of people realize if they don't get into contracts soon, the rates are going to get them to fall out because they won't be able to afford, because rates have moved up drastically over the last month, which is the most I've seen go up in a month in the history I've been doing this, and I've been doing this a while. That's why I have gray hair all over my beard. And by the way, I'm growing this out, and then my excuse is because I'm going to a 70s party in a couple of weeks, so I want to have big mutton chops.
So what's my excuse?
Just lazy.
Yeah.
Can't afford razors with all your kids.
Hey, that reminds me of Josh's razors, right? You seen that commercial? No, I know.
No.
It's a little off topic, but
yeah, that's fair. All right. So basically that's what you need to save for, the whole show was about what you need to budget for when you're saving when you're buying a home. Down payment, closing costs, and prepaid items are basically what you need to save for. And each transaction, each time of the year, like prepaids, it depends on the month that you're going to be closing in and your first payment, how many prepaid months we have to put in for taxes and insurance. It's always usually 2 to 3 months for insurance, but the taxes could be anywhere from 3 months to 9 months, depending on that time of year. The later, and it's weird because that's California. It can be different in other states.
Gotcha.
So you need to check with your local people if you're watching this from out of state. And that's basically all I had today.
No, I think that's great. Like you said, people sometimes ask, well, why do you guys talk about the same thing? Repetition. We got to really help people understand and kind of grasp it, because the first time you hear a concept, it's really not going to stick. Right. It's pretty rare. But hearing it over and over again, just like, growing up I'm telling my kids, pick up your room, make your bed, things like that. Right. Yeah. Hopefully by the time they're adults, they'll start doing it on their own.
Or join the military, and then they'll do it.
Right.
So I just put this back on the screen because it's the biggest misconception is how much money you need for a down payment. Mm-hmm. That is the biggest misconception. You do not need 20% down. You need, 3%, 3.5%, or nothing if you're doing VA or USDA. So don't wait to purchase to save enough money, more money for down payment. It's not going to make a difference. We had a lady that we were working with, you and I, and she didn't get into contract. And I talked to her a while back, and I told her what this numbers were going to be. And she said she's going to wait for her to save more money for a down payment. Well, since then, rates have went from 3% to 4.875.
Yeah.
So don't wait. The rate, we have no idea where the rates are going this year, how much further. They will eventually go back down. And so I'm telling a lot of my clients, just get the house you want now, because this is the house you want. And then we can refinance you down the road to a lower payment. That's basically how it works. The rates go up because we go crazy. The Fed overreacts. We go into recession and rates go back down. That's just typical.
Yeah. Like you said, get in the house now, because otherwise, if you're not in a house currently that you own, you're renting, and your
rents are going up.
Your position's only going to get worse as time goes on. Your rents are going to go up, and until rates go down, houses aren't going to get any more affordable. So let's start looking now.
Houses are going up in value. That went up 20% year over year last month. It's continuing. That's 20% national. San Diego's 28%. San Francisco is 20 something percent. That means Modesto is definitely 20%. This area is going up. There's just not enough homes, and we're not going to build enough homes for a very long time. So don't wait. If you can, reach out to one of us. Let us get you looked at, and then with you and get you on that path. So again, thank you, Bobby, for being here. Thanks to everybody for watching. And if you like what we do here, just subscribe, and we'll talk to you next week.
Awesome. Have a great day.